Episode 2. What's up, everybody? Today is Friday, December 15th. Oops. Today is Finding Your Way, Season 3, Episode 2. We're gonna dive deeper into traders' mindset, trading psychology, and then at the end, we're gonna help these guys get into creating their game plan for their strategy. There is 3 different strategies: fair value gap, moving average, and standard dev strategies. So we're gonna slowly help them develop their game plan. So like that, they can have a system or start creating that system to get that confidence to take good trades, not the bad trades.
Still trying
So
to test. Anybody?
what?
Can you hear me?
Yeah, we got you. Hey, I muted you, just because I was doing the intro, but you can unmute yourself whenever you want. So yeah, this is episode 2. This process is a little slower, and it might be boring, but boring equals consistency. Consistency equals profitability, and it's just gonna create that confidence in your strategy. Um, so more into the understanding of understanding your emotions. That's one of the biggest things that a lot of traders have an issue with, is letting their emotions get in the way of their trade, either by cutting off their winners too short or letting their bag holding their losers. And some of the emotions that you'll run into is greed. When you get greedy, guess what that it just blinds you. You're gonna take a trade, and when you should have got out, you didn't get out because you didn't have a plan or you didn't have a target. And that greed is like, oh, it can keep going up. Next thing you know, it reverses on you and you go from green to red. You don't want to get that. You want to kind of calm that down. Have a plan. Have a plan. Okay, I'm getting out at this certain level. I'm getting out at this target. I'm getting out at this point points at this amount of points. Um, Next thing is fear. Sometimes when you don't have that clear mindset in the morning and you get in the trade and you immediately start fearing that the price action is going to go against you. Trading in the zone kind of keeps that in check. And a lot of traders, what they concentrate on is the reward before the risk. Trading in the zone says concentrate on accepting the risk. And I mean, the way I see it is it's called risk reward, not reward risk. So focus on the risk before you get into the trade, to ask yourself, what are you willing to risk? I'm willing to risk this level, whether it's a low, whether it's a fair value gap zone. Are you going to stop out there, or or is it a moving average? If it's a hard open close below that moving average, you want to accept that risk. So like that, you already know your risk. You need to cut it there and reset. When you let the losers run, you're going to you're gonna start revenge trading, and you're gonna start making bad decisions. Hope. Sometimes you get in a trade, trust me, I've been there, where you didn't get in the best or the optimal or the grade A setup, and it goes against you a little bit, and then you just start praying and hoping that it goes in your favor. And you're like, gosh dang it. You're hoping, you're just praying right there, and it just goes red. Instead of keeping your mind clear, instead of hope, you already have a plan. You're like, okay, let me calm down. Let me look at the chart. I have my levels, I have my stop loss, and I have my target. Or even if you don't have your target, you want to have a stop loss. Because you remember we talked about the risk. You already know your risk. So you're not hoping. If it hits your risk zone, your risk tolerance zone, then cut it. That's gonna prevent you from making more bad decisions or getting in the worst trade that you should. Um, the second thing, regret. Sometimes you look at the chart and you get not anxiety, but you get trigger shy, where you know it's your setup, you know it's your strategy, and you fail to pull the trigger. Next thing you know, it runs or it dumps, whether you're a long or short player, and then you have that regret. You have that regret, and you're like, "Fuck, I should have got in," and it keeps going, keeps going, keeps going, and then you hit the trigger, and you get in, and you're getting in at the top. When one of the number one rules is don't long tops. And for the short players, don't short bottoms. And you have that regret, and then next thing you know, you get in and it fucking reverses on you and it either blows up your account or you're red big time. Another thing, you have a winning trade. You hit your 10 points or you hit a home run, 15 points, and you're up big and you're euphoric and you're like, yes, 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 I got it. Next thing you know, it's like, all right, you see your setup again, and you're like, I'm gonna take it. And it's not your real grade A setup, it's more of a grade B, maybe grade C setup, and you get in and it goes against you. That was your like the euphoria clouded your mind or that overconfidence. Sometimes I've been there. You have 2, 3 green trades, you're up big, and next thing you know, you make a dumb decision, you get in because you were clouded by overconfidence or the euphoria, and you're like, fuck, it's against me. And you're like, and then you're like reverse. You're going from euphoria to regret that you got in to hoping that it goes back in your direction to fear that it's not gonna go back into your direction. And then you just keep bag holding. You're like, fuck, I should have just cut it. So reading trading in the zone helps you like understand those emotions, understand that not every trade is going to work, even if it's your grade A setup. Sometimes, like Brandon says, all the indicators are out the window. It's a force up day or it's a sell off day, and the indicators are out. Sometimes that happens. You just got to accept the fact that you don't have to take every trade and you don't have to trade every day. You'll once you start trading and you start writing down in your journal, there's gonna like LunatheCat. He never traded data. He didn't first off, he never traded that whole day. He never traded data days because it was high volatility. Sometimes his indicators didn't work and he made bad decisions. So he avoided data days. But guess what I told him? I told him, journal, take sim trades during data days and journal, take a screenshot and journal. Journal what your grade A setup looked like. Journal if you got in the right position or the right
Simper.
location. Yeah, I got you.
Yeah. I just wanted to say, while you were talking about, the fear, greed of the emotion, but more especially the hope, like when you're in hope, I notice that for myself, whenever I'm hoping for something, for the trade to go in my favor, it's the best time for me to just accept the loss.
Yep.
Because when I'm hoping, it's because I noticed that, oh, maybe my entry wasn't perfect. Oh, maybe it might go up. Oh, maybe this, maybe that. So I took the habit of just accepting that loss. If I'm hoping for something, just accept the loss. That's it.
Yep.
So that's how I'm coping with it so far.
Yeah, that's an awesome tip. And I'm glad you brought that up because you keep hoping and hoping while price action is keep going against you and against you. And you should have cut like 10 points ago and you're negative 15 points. And you don't want to get stuck like that because that's going to create, first off, bad habits. And bag holding was one of my bad habits. That's how I blew up. 3 of my accounts was hoping and bag holding. And it
Yeah.
never went into my direction. So like Easy said, if you're hoping, just cut it.
Hope is not a strategy. Hope is when like it reaches your stop and you don't cut it. And then you go, all right, maybe when it goes down to the 200 SMA, it'll get support. And then it doesn't. And you're like, oh man, maybe when it goes down to 666, it gets support. And it doesn't. And then you're just like that. And then like at some point, this feeling of depression will grab your heart and you'll stop out of the trade.
Yeah.
And that's a big burn.
It sure is, and it just fucks up your day for the rest of the day. And it's like, man, why didn't I listen to myself? Why didn't I
Oh,
do this?
yeah.
Why didn't I do that? You just keep questioning yourself, and then you're gonna not only that, but you're gonna start questioning your strategy when the issue is not your strategy, it's your emotions.
Yeah. And like, and to be clear, it's not the market that burned you. You burned yourself.
Exactly.
And that's not a harsh thing to say. It's just the truth, you know, because like all this is in your hands. And when you learn how to manage it, you know, it taking responsibility for this stuff feels good. And it feels better the more and more you're able to do it.
Yep. Keep practicing those good habits, and that's what these good habits keeps all these bad emotions in check. So creating those good habits, it goes in because when you have those good habits, you're cool, calm, and collected through the whole trade. You're not even, hey, if it hits my stop loss or if it hits my target, you're just same emotions like a robot. Just no emotions. I'll celebrate at the end of the day when I shut her down. That's when you celebrate. You don't celebrate before you even shut down your computer because you're just gonna fog your brain and you're just gonna make bad decisions. Uh, so developing a trading mindset. One of the biggest things that I'm so happy that Brandon instilled in the elite members is positivity. Man, that guy is always positive, no matter what type of day he's having. He is the happiest guy. I mean, that guy is going through some cancer treatment, and he's still happy, coming, showing up for us, and staying strong for us. So creating that positivity, you always want to go in with the confidence like this trade's gonna work out for me. You don't want to go into the trade like, I hope this trade, I hope it works out for me. You want to be like, it's gonna work out for me. This play is my A grade setup. I'm getting in. It's gonna work. You don't want to be negative. Negative attracts negative. Positive attracts positive. Not only that, but when I switched my mindset in my personal life to be more positive and negative, more good things started happening to me. Whether it's positivity around the family, my kids being happy, whatever it is, and it's just bringing that positivity to your life. That not only that, but it rubs off on people. Brandon's positivity rubbed off on me. Now I'm just more good things are happening to me. So characteristics of a successful trader's mindset. We already learned the bad. What's bad about the trader? What's bad about trading? Now let's switch it to the positive side. What's a good characteristics? Discipline. Discipline to stick to your strategy. Discipline to meditate. Discipline to stick to your routine before you even start trading. The little things count, and that's why I kind of created those rules. If you can be disciplined with the rules that I created for you, it's gonna carry over to your trading. Be disciplined not to take stupid trades. Discipline not to trade the bad trades. Discipline not to trade because somebody else took the trade. That's discipline. Patience. What do I always say? Patience pays off. Patience pays. That's a waiting game. It's a waiting game for your grade A setup to develop. Later on, we're gonna teach you a grade B and possibly a grade C. But definitely you're gonna have a grade A setup and a grade B setup. You're gonna have to be patient for your grade A setup to set up first, because if you haven't taken a trade, I'm not gonna tell you to go trade your B grade setup. I want you to trade your grade A setup because the odds are in your favor more. For example, my grade A, this is just a hypothetical. My grade A has an 80 to 90% success rate, where my B grade has, 75 to 50%. I would say more like 75 to 65%. And your grade C is a toss up, it's a 50% favor in your favor, right? And I want you to trade your grade A, create that cushion, so you could possibly take a B grade setup, knowing that you might, accept the fact that you might give a little bit of your grade A or your grade A trade that you just took, you're gonna give a little bit of that back. But not only does taking that grade A setup first, but it allows you to, instead of having a 2-point loss, maybe you can have a 3-point loss for that trade, right? So it allows you to have a more acceptable stop loss, instead of just having like a 2-point stop loss. Oh, I can wait for the close below the fair value gap, or I can wait for a close below the moving average, or I can wait for a close below a standard down level. Being resilient. Sometimes you're gonna have good days, sometimes you're gonna have bad days, but sticking with it. Sticking with your strategy, not dumping your strategy to go jump onto another strategy that you're gonna have to relearn, and it's just creating that cycle over and over and over. So that's why I don't want you guys to have volume profile, MACD, RSI. We're slowly gonna add that to show you how to stack catalyst, but that'll come in a week or two, where we're gonna teach you how to stack catalyst the correct way, not just, oh, I got 20 indicators on my chart. 5 of them say buy, 15 of them say sell, or whatever the case is. And then adaptability. Even though your strategy works in a bear market, you're gonna have to adjust it to a bull market, because not the same criteria might be the same. You're gonna have to adjust. This whole game is about adjusting and adapting. Adapting to a bull market, adapting to a choppy market, adapting like LunatheCat. He had to adapt to data days. There's going to be adaptability everywhere you look, whether it's a data candle, whether it's a data day, and that's why journaling helps. Last FOMC, I got wrecked, but that was the last one. Okay, what did I do bad on the last time that there was a Powell speech that I could do better this time? Realism, creating realistic goals, realistic, you're not gonna come in here and make $500,000 in a year. You see all these guys, you see these YouTube videos, oh, I made $500,000 or I made $1 million. I'm sure they went through a lot of pain and suffering and setbacks to be able to show that off. And by all means, if you fucking have a $500,000 account in 1 year and you built it up from 10 grand or whatever the case is, go ahead, go boast, go show off, whatever. But there's gonna be a time, and there's been members where they hit a home run, they hit 25K on one play, and then the next day their account's blown up because they didn't really have a system in place to show him how he hit that home run. When you hit home runs, right? What all you saw good, and all is there anything bad that you saw? You want to journal what good habits, or what did the candles look like? What did the levels look like? You're not gonna you gotta come to to a realization that you're not going to hit home runs on every single play. And that's why we're going to create a system where you're catching 10 points, you're catching 15 points. But first, before we get to that level, we're going to have you start off at, with a tee, just like my son. He's 2 years old. Last year when he was 1, he was hitting off the tee because he's seen his older brother playing baseball. So he was hitting off the tee. Now he's 2, almost turning 3. I could pitch him the ball and he can hit it pretty consistently. That's what we're going to do with you. We're going to start you off on the tee, and then we're going to start, we're going to have a pitching machine next. Next thing you know, you're going to be taking fastballs from Major League Baseball, pitcher. So we just got to take it baby steps and start building that mental toughness. There's going to be bad days. There's going to be good days. There's going to be good trades. There's going to be bad trades. But let's make sure that you have more good days and more good trades than you do bad trades. And you just accept that. To me, and I think Thomas Edison said that he failed 10,000 times before he succeeded in the light bulb. Hey, you're gonna fail a lot of times before you see consistency. But you can write this down. Fail. What does fail mean? Fail is an acronym, and it means first attempt in learning. Right? You're gonna fail. But stick with it, stick with your strategy, and just fine-tune wherever the mistakes are. That's why I'm having you guys journal and watch that Ray Dalio Principles video, because you want to learn from your mistakes. You will learn. Lasagna Cat can attest. He's probably the only trader that always came in here and shared his red trades. But his red trades were amazing, not because they were red trades, but because he learned the most. Not only did he learn the most, but other members learned from his red mistakes. So
yeah, and those were real valuable for me. And you could go in the shoot, I forget what it's called. It's like the there's like a trade recap room that we don't use too much anymore. But back in the day, if you can scroll that back there to like 2019, you see my old screenshots. Holy shit. I wrote like a whole novel about every red trade. It was really fucking funny. Not funny like in a sense of making fun of it. It's just like, damn, this dude really felt like writing about it. It's pretty funny.
hey, but
And
not only
you know,
that, but you taught everybody like what not to do.
right. Yeah, exactly. It's really valuable. It's valuable. It's a great way to contribute. And I love seeing people sharing their red trades. And I'll tell you, you'll know like you'll know when your trading is like paying off. Um like in the positive end when you're like doing your recaps and you're like, wait a minute, didn't I already recap this trade? But no, you didn't. It's a different trade. They're just all starting to look alike because you're getting your strategy together. And like I remember the first time that happened, I was sharing my trades during Finding Your Way this one day. I was like, all right, here's this one screenshot for a green trade. It's awesome. We talked about it. And I went to pull up the next one and I pulled it up on a screen and it looked exactly the same. I was like, oh, my bad. We just did that one. I was like, no, wait a second. That's that's a different one. But they look the same because the strategy is becoming consistent.
Yep.
Oh, and Takana says he remembers that. Yeah, no doubt. Yeah, those old recaps.
I remember the same thing happened to me when I'm like, damn, like my trades all look the same. It's boring. And then this is when I remembered. I'm like, oh, boring is good. So therefore, I think I'm doing something right. So yeah, they all look the same now.
That's awesome, because that's when you start to have those light bulb moments like, oh shit, I keep repeating this bad mistake. Let me see what the fuck am I doing wrong? And then even that mistake, you gotta break it down. See how I'm breaking down your strategy? Break down that mistake. Did I get in because my emotions got in the way? Okay, then I gotta work on my emotions. Did I get in because my emotions were fucked up? It was at a bad level and it was on the wrong side of the trade. So you just gotta break that down to the simplest. Okay, what do I gotta work on first? You can't work on all 3 at the same time. You got to work on your emotions, work on your entry, or work on your levels, either drawing better levels or drawing better fibs or drawing, paying attention more to this indicator during this type of time. It's just slowly just, hey, take your time. This shit takes time. Yeah, and you'll build that mental toughness where you'll be able to take a trade and not even like you could just brush it off. Because building that mental toughness, not only is it gonna help you with your trading, but it's gonna help you like be able to stay calm when the trade is going against you. And not all the trades are gonna be like you're in and it's green right away. You're gonna be able to, handle that little red a little bit before getting in, or allowing that play to actually unfold and play out in your favor. Risk management. Risk management helps with your emotions. Are you over leveraged? Are you adding too many contracts? And Easy, he was like, he did it even though he was trading on sim and we were scaling him up because he went from over trading to becoming more consistent to getting more confident. And then we're like, okay, it's time, you're confident. I can see it in you. Now let's try to scale you up. He's like, what? 4 contracts, 6 contracts? No, I'm never gonna trade with that. No, I'm sure you'll come to that point. I started off with 1 contract on MES, and I slowly scaled up to 10 contracts on MES, build up my account size, and then I started over again when I went to ES, when I was starting with 1 contract on ES. And then I built up my confidence because even though they're exactly the same, it's that pressure of going from $1.25 a tick to $12.50 a tick. And you're like, fuck, if it goes against me 1 point, I'm already down $50, and it's like, hey, calm down, slowly build you up, teach you about that risk management because you don't want to over leverage yourself where you're, 4 contracts in your first week live trading because you already traded 8 contracts through this process. And you're like, fuck, and then the emotions, because the whole time through this process, I want you guys to sim trade. I know you guys might get the urge or whatever, you might even take live trades. Try to keep that in check. We're gonna get there, trust me. We'll get there. But we want to teach you about that risk management so you're getting in where you're supposed to with the right size of contracts and not, blowing up your account or blowing up your prop firm account and failing. You have to rebuy or reset your account and start the whole process over again. Setting realistic goals again and expectations. The expectation is that you're gonna have losing days. You're gonna have losing trades, no matter what. You're not gonna be 100%. Not one strategy is 100% accurate, no matter what. So just come to that realistic and set realistic goals. Like I said, you don't want to say, "Oh, I'm gonna make $500,000 in half a year." Set a realistic goal. The way that I started setting realistic goals is, okay, my first goal was $600 a month. $600 a month. That's all I wanted. All I wanted to do is be profitable. That's it. $600 a month. So then I broke that down. I read a book. I can't think of it off the top of my head, but it's like taking your 5 or your 10-year plan and breaking it down from a 5-year to a 1-year to a monthly to a weekly to a daily. And that's going to help you create good habits. So what I did is I took that and I took it from a monthly goal to a weekly goal to a daily goal. So what does that look like? $600 a month, $150 a week, like $35 a day or $30 a day, for 5 days equals 150. So $30 a day was my goal. I went from taking, in my max goal, trust me, I want you guys to write this shit down. Max trades, four trades. That's it. If you're taking more than 4, you're most likely over trading. You could probably take 5, but I don't recommend it. Maybe 5 later when you're consistent and you can make 5 green trades in one day. This is gonna help because you're gonna develop, and Easy can attest that even though you have 4 trades, you can hit your daily goal with 2 trades. The first 2 green trades, awesome. Freaking 1 contract on MES, 2 points, that's $10. 2.5 points, that's $12. And that's already halfway, a third of the way to your goal. Yeah, when you first start out, you're gonna have one green, 1 red, 1 green, 1 red, and then call it whatever. And then you're gonna slowly. I've seen it with Easy, and I've seen it with LunatheCat, where they were trading 4 times a day. Well, LunatheCat really couldn't because of his schedule, but he was hitting his goal in 2 or 3 trades, and he was done. Call it right there. Stop live trading, and then if you want to keep trading, I would sim trade after this whole thing, and then risk management. Create a proper stop loss and a proper take profit strategy. We'll slowly teach you. That's why I wanted you to just catch 4 to 5 points, 4 to 6 points right now, just to take profit and write down what, if it continues going, say you cut it off at 5 or 6 points and it goes up and it hits your level, whether it's a standard dev level, fair value gap, price action, previous structure, or a moving average, and it goes and hits that, write down what the candles look like. Was there any catalyst that helped it push up there? Was there any, what did the moving averages look like? What did standard dev look like? What did the fair value gaps look like? Was it a big fair value gap? Was it a skinny fair value gap? To see if they're stronger. Are the bigger fair value gaps stronger than the skinny ones? You're gonna start seeing that shit and be like, oh, okay. Now, what you want to do is start recognizing the good patterns. The trading in the zone says, recognize the good patterns, keep trading the good patterns, so you can keep training your brain to pick up good patterns. And then controlling your emotional responses to losses. This is a biggie. Why is this a big one? Because if you can't control your emotions to a loss, you're not gonna be able to reset and re-engage into the the trading day. What do I mean by that? If you bag hold and you let your emotions get in the way and you took a big, huge red, you're gonna revenge trade to try to get that money back. Guess what? Revenge trading doesn't work. You're just gonna dig yourself a deeper hole. So if you feel those emotions, if you start sweating because you're so mad that you took a big red, go run a lap, go do some push-ups, go do jumping jacks, go for a walk. You want to be cool, calm, and collected the whole time. It's gonna be hard, and it is. Maybe read Trading in the Zone 2 or 3 times. Read another one. Read The Hour Between the Dog and the Wolf. That Easy took that and ran with it. I told them either work out during your morning routine, work out, meditate, do get a cold body shower or jump in a ice bath or whatever, just so you can regulate your hormones. The Hour Between the Dog and the Wolf talks about your hormone levels, your estrogen levels, your testosterone levels. If they're out of whack, you're gonna make dumb decisions, and it's gonna get you more emotional when you shouldn't be. And that being said, if you wake up and you're mad or you're sad or you're having a bad day, do something to clear your mind, whether it's meditating, working out, just watching a funny movie, playing video games like Call of Duty or Mortal Kombat, anything that will help clear your mind. Balancing risk and reward. There's some traders that suggest 2-to-1 ratio, 3-to-1 ratio. You can have a 1-to-1 ratio and still be a profitable trader. You're like, well, how can that be? If you cut your losers short and you let your runners run, your winners run. That's how you can have a 1-to-1 ratio and still be a profitable trader. Where, like, for example, let's say that you start off with, $100, right? Start off with $100, you risk $2 and you lose $1. If, let's say you had 3 trades, you have 10 trades throughout the week. You have 2 trades, right? So you let your winners run. 2-to-1. So you cut off at let's just say 2 points. You're gonna have $10 for every $5 you risk, because you're only risking 1 point, right? So you're gonna lose $5. Let's say you have 3 out of the 10, you have 5 red days or 5 green days. That's $50. Versus you have 5 red trades where you have $25 red. Guess what? You're still $25 green for the week, because you're balancing out. You know when to cut your loss, and you know when to cut your winners. Y'all learned that. Like I said, techniques in improving your trading psychology. Mindfulness. I'm a biggie on this. You don't have to do this, but meditation. Meditating for 5, 10, 15 minutes is more than enough to clear your head and be aware. There's other stuff that I do, like the Silva method, which is a type of meditation and manifestation system, but it teaches you to engage both sides of your brain. It uses like alpha frequency waves, where the CIA uses this. They use alpha waves to help, and this is just listening, in your ears, where you just meditate and just let the alpha waves, and you engage both sides of your brain. I don't know if that's mindfulness, but that's what I do during meditation, and I notice that my decision making is a lot better. Visualization and mental rehearsal. Like when I said in the beginning, visualize your loss first. Visualize and accept the fact that you already lost. Whatever it is, if it's money, just say, oh, this trade is going to cost me $200. Accept that loss. I already lost this trade. When you accept that, it's easier to cut the loss, and let the runners run. So visualize that, accept the fact that you already lost the trade, whether it's $50, $100. It's going to help you reset and be able to make that money back later. Not revenge trade, make that money later. Continuous learning and education. This is a biggie, because I always used to ask Brandon, well, how can you identify the squeeze? What told you what told you that this next candle is gonna squeeze? And he's like, I don't know, it's just gut algo. And slowly he started dropping these little nuggets. And that's one of the reasons why I don't recommend that you mute Brandon and Connor. But it's like, it's like when you were a little kid and your mom used to tell you, don't do that. You're gonna get hurt. And you let it go in one ear, not the other. Right? Just take that with Connor and Brandon. Let it go in one ear and not the other. Unless it's a nugget, a lesson that you like, oh, now I know what he means. Like one of the big things Brandon, even though I would ask the same question every time there was a squeeze candle, I would ask the same question. Well, what signaled that it was going to squeeze? And slowly he was like, oh, the volume gets sucked down before a big bar. There was a volume beat in the consolidation zone. He would slowly just drop those nuggets. Write that shit down. Take notes. And not only that, sometimes he would drop nuggets and I would go to YouTube. I would go to YouTube University and dig deep. And I wouldn't look to change my strategy or change anything, but I would look for little nuggets from a different person that complemented the elite strategy. I'm not completely changing the elite strategy. I'm saying, okay, I can take this and I can implement it over here. So the next time Brandon saw a squeeze candle, I'm already ahead of the game. I was like, okay, Brandon's gonna say squeeze right here. And if he didn't, then I would ask him again, okay, what'd you saw? What'd you see? Did he see MACD? Did he see RSI? Did he see TTM? Because I already got the volume part down, right? He said the last time he said it was the volume. Okay, so I seen the two little volume bars go down. And then I would ask the same question again. Always ask Brandon or Connor or me or any other members that have been here for a while. Because he's always dropping that knowledge. And some of us were here, some of us showed up, some of us didn't. That's another thing, consistency. Consistently show up every day. Sometimes you'll have bad trades, you have to take a day off, but I know it might be hard, but just show up and don't even trade. Just, hey, what's going on? Another thing, seeking support from peers and mentors. That's what this group was created for. That's what this Friday, I don't know if you would call it mentorship or just like a powwow of members that are struggling. And that's why this was created. There was 10 of us that were just struggling, that have been elite members since the beginning, and we're just struggling. Even though we might have been good at stock trading, we're just struggling because we had good days and we had bad days. And we didn't have consistency. So I was like, okay, let me create something where we can just have a powwow, kind of like an AA meeting where we, help lift each other up. Like, oh man, I had a bad trade, and we'd share that trade, and everybody provided input. Like, okay, this is what I saw. LunatheCat would say, point out, oh, okay, this is what I saw. Waves would say, oh, this is what I saw. Okay. So I would just take notes. When we're critiquing your trades, don't take it to heart. Don't take it personal. We're just trying to help you create good habits and prevent the mistakes that you keep doing. Take breaks. Sometimes you wake up on the wrong side of bed. Take a break. Don't trade that day. If you're stressed out because of work, a lot of us still work. If you're stressed out because something at work, you have a big project at work, hey, take it easy, don't trade. Maybe just glance at the chart and just kind of walk yourself like, okay, this is my plan for today. Even though you're not trading it, be like, okay, this is my bias because of this. This is my, and then maybe at the end of the day, be like, oh, I seen 3 trades in that I could have traded. Write that shit down. Take a screenshot. Hey, I could have taken this trade. And managing stress. Working out helps manage stress. Meditating helps manage stress. Just taking a breather, taking a break. Now, Easy says, best advice, reach your daily goal, close your chart, and shut down the computer. Sometimes you'll have a grade A 2 trades, you'll hit your goal, and then you trade your grade B setup once, and you give half of your money back, and you're like, fuck, why did I fucking do that? If that's the case, hit your goal, either shut it down or sim trade. But don't sim trade more than what I told you, 4 trades. Don't trade more than that. You shouldn't be taking more than that. You could take one after hours, after futures open, pre-market, and then right after the open, and then power hour. Those are your time slots where you should at least be taking 1 trade. There's always a trade at midnight Pacific Standard Time, 3 a.m. Eastern time. There's always a break because that's when the Asian market is closing down and the European market is opening up. So there's moves there. And then there's moves when the US pre-market opens up and it's taking over the European market is closing and New York is opening. And then of course, opening and then power hour. So there is moves, especially in futures, there are moves. Some of us have weird schedules. So if you can't trade the open, then look for power hour. If you can't trade power hour, then look for it at midnight. If you're sleeping that time, then you just have to adjust. No, you don't want to sim trade because just to see if it works, like, are you taking your grade A setup? Yes, no. And not only that, but price action move like between 8 o'clock, no, not 8 o'clock, 10 a.m. my time, Pacific Standard Time, to about 11 o'clock in the morning, my time, is just dead. Like even when futures opens at 3 p.m. Pacific Standard Time, when it opens, it's just like watching fucking paint dry. It's like, fuck this. I'll step away and I'll come back around 6 p.m. Pacific Standard Time. Sometimes there's a move there. But the reason why I said not to trade on the sim, you could, but if you are taking the trade, make sure it's your grade A setup. Don't be taking the trade because it hit a certain level. One of the biggest things on game planning is creating objective rules, not subjective rules. What does that mean? Objective is like catalyst stacking. I seen it hit my level. I see the volume. I see the candle development. And once we add more catalysts like RSI, MACD, then you're going to stack those catalysts. Subjective rules is it hit my level, I'm getting in. That's subjective. You're getting in just because it hits your level. When volume, like let's say you're getting in long because it hits your level, but you don't have buyer volume in control. You have sellers in control. You're probably going to get smoked. Don't start testing your B setup until we actually get there, because that might not be your B setup. Kelsey asked, I'm testing out a B setup. Well, how do you know it's not your C setup? You know your strategy more than me, but I can tell you if it's your B or your C setup, because once I learn your strategy, I'm gonna be able to identify your grade A and your B grade. Yeah, let's take it a little slower. I know you wanna start making money. You still got some time for retirement. Let's get you consistent. By the time you retire, you're gonna be making $3,000 a month or more. But yeah, my goal is to get you consistently making $600 a day, $500 a day before you retire. Yeah, that's awesome, dude. $2,000 in a month, that's great. But, yeah, we'll get you there. You're gonna be, $500 a month. I wanna get you down to $2,000 a week. Not in a month, in a week. We seen Brandon take his $1,200 account to 3,200, 3,500 in 1 week. So it can be done. Cool. Now that we got that wrapped up, let's jump into the game plan. Set up. Hey, none of us are Brandon, but if I can start off with $30 a day, we're now kind of close to hitting a couple grand a day, a few grand a day. Anybody can do it. You just have to have a system that backs up your strategy. So the fundamentals of creating a trading plan. That's why we want you to create those, to train your brain to see the good patterns in your strategy. Luna the cat said, well, what if you see this big red candle going down to your level? Well, you kind of don't want to see a big red candle going down into your level, because what's most likely going to happen is going to bounce up, and then it's going to retrace or retest, and then it's just going to continue going against you. What you want to see is slow. You don't want to see a big red candle hit your level, or if you're a long player, a big red candle hit your level, and then you get in, and then it bounces, it goes up for a little bit in your favor, and then it just smokes you. You want to kind of slowly see it go down to your level and then get in, and then we'll get into that. But yeah, components of trading. So you need to have an entry and an exit strategy. Right now we're concentrating on entry. For this week, we're gonna concentrate on entry. Next week, we're gonna jump onto your targets, to your target, your take profit target, or your profit target, whatever you want to call it, and your stop losses. And position sizing. We're gonna start you out with 1 or 2 contracts, whatever you feel comfortable with. Whatever you're really gonna start. If you have a $600 account, I recommend you start with 1 contract in MES, not ES, because you're not gonna. First off, with $600, you're not gonna be able to trade ES. And you're gonna over leverage yourself. We don't want to teach you over leveraging. We're gonna teach you good risk reward ratio. We want you to have a 2-to-1 optimally, but hey, if a 1-to-1 works, then it works. And then we're gonna teach you how to look at the daily chart. You got to create a routine. One of the biggest routines that Brandon has taught us: start at the weekly. What does the weekly chart look like? Then you jump down to the daily chart. And then he would directly jump into the 1 minute. And recently he started adding the 5-minute, 15-minute, 30-minute, 1 hour, 4 hour. Those are all legitimate. You don't have to have them all on your chart. You don't have to have them all on your chart. You can have the weekly, the daily, and the 1 minute. If you trade the 1 minute, trade the 1 minute. If you trade the 5-minute, then have the 5-minute. If you don't trade, if you only trade the 1 minute, we're gonna teach you how to use the 5-minute, 30-minute, hour, 4-hour, and on. Because the fundamentals that Brandon taught us was trend lines off the weekly, trend lines off the daily. And if you guys want to learn how to do that, jump over to BRT website. It's like one of the first 3 videos. Teach you how to do trend lines, how to do from the daily and the weekly, what to pay attention to, and and then how to, jump from the daily to the intraday timeframes. And then review and adaptation. What does that mean? Review your trick and Easy and LunatheCat can add some points to this if you guys want. But they would journal, and then like I said, what they would review their trade, and we would correct where they're getting in. Are they getting in on the wrong side of the trade? Are they getting in too early? Are they getting in too late? Are their stop losses too tight? Are their targets too close? And then that's a whole thing of it all revolves around trading journal. The role of a trading journal, right, is to identify your inefficiencies or your mistakes so you can correct them. That's why I want you to watch that Ray Dalio video. Watch that video so you can write down your mistakes. So you can Kelsey says journaling is the biggest key for me. It is the biggest key in anything of the whole process. Because if you don't write them down, and that used to be me. I used to be like, damn, I fucked up this trade, and I wouldn't jot it down. So the next day, guess what happened? I didn't have it written down or anything, and I would repeat the same mistake again. I was like, what the fuck? But I noticed that once I started writing down my mistakes and I reviewed it, and then I went back to the chart and be like, okay, I could have done this better, and I jot that down. Okay, I seen this. I shouldn't have got in because I seen a big red candle or big green candle go to my level. That means that it was strong to that direction. But identifying those little mistakes that we can correct. That's why I like Dell sends me his trade recaps. I'll critique him and provide him some feedback on what he could have done better, or how he could have entered better, how he could have exited better, whatever the case is. But journaling. But yeah. Next week, start developing the trading mindset. Yeah, I see that journal. Developing that trading mindset where like you're gonna have rules for your trading mindset, and then you're gonna have rules for your strategy. The trading mindset is I'm fucking mad. If you're mad or you're not clear-headed, you don't trade, or whatever your rule is. Strategy rules is, okay, is there a pullback to the standard Dell? Is there a pullback? The trading rules for your strategy, they're gonna be designed as a question, not as a definitive rule. The reason why I designed the rules as a question is to help you narrate the chart in front of you to keep your mind in check and your trigger happy finger in check. Because I got this, Brandon didn't necessarily tell me or tell us to narrate, but I noticed that I just started noticing that every time Brandon would narrate, he would say like, oh, this is a chop zone. I'm not getting in. This is not what I want to see. It's like narrating a film, right? You're narrating what's happening, like a silent film. You're narrating what's going on the chart on the screen. You're gonna narrate what you see on the chart, so like that helps keep your mind in check, helps keep your trigger happy finger in check. And that's all asking your questions. Okay, what do I want to see next? What do I want to see next? Is RSI bullish? Is MACD bullish? Is it bearish? Is it a short bias? Is it a long bias? And that all comes into your play because you're gonna come to a realization that you're gonna see patterns easier. If you're a long player, you're gonna see long trades easier. If you're a short player, you're gonna see short plays easier. Some people might think, oh, I can play both sides. I don't know what it is, but I don't think everybody plays both sides like as soon as they start trading. They might think they can. I came to a realization that that my brain can pick up long patterns a lot easier than it can pick up short patterns. I couldn't even
People that says they trade both sides at first, it's most probably FOMO or greed that's playing with them, right? They don't want to miss an opportunity. They want to go. They want to go short. That's what I find.
Yeah, exactly. And I'm glad you brought that up because when you first started, you're like, I can play both sides, and like the following week, you came to find out that you seen patterns short patterns a lot easier than you can long patterns.
Yeah.
And I was the same way. I would never trade short. I tried short a long time ago before you went through finding your way, and I would get smoked. I was like, what the fuck? I thought I seen it exactly how it looks long, and something about it would not play in my favor. And now when you went through finding your way and you were always playing short, that opened up my eyes. Like, oh, okay, now I can see the short plays. Now I'm trading both sides. But that's
can you hear me?
Yeah, I got you.
I trade both sides, but I primarily do long.
So let's just focus on long. Just focus on long. I know you will want to trade short, but let's focus on long because your brain will pick up those patterns a lot easier. And not only that, you're gonna, like I keep saying, you're gonna train your brain to see those good patterns. Later on, when we go, maybe Luna or Dell will play short, you'll start to open up your eyes to playing short. But I highly don't recommend that you guys.
It becomes a very strong discipline because what happens is in the morning, Brendan will be talking about how it's going to be a short day.
Mm-hmm.
And if I'm only playing long, I won't play. And you need that discipline.
Yeah, you need that discipline and that patience. That patience pays off. You're like, okay, if it's short, then okay, do I see the short play? No, I can't see it. Or I don't see what Brandon sees. What should I do? Don't touch it. Don't touch it
I
at all.
can see it because I can see it on my standard deviation. It goes down and it's going down.
Yeah, well, yeah, you can literally see it, but is it your grade A setup short? Maybe, maybe not. If it is your grade A setup and you take it, it still might not play in your favor because you're not gonna have that optimal entry short because you're a long player. Even though you do see it short, you're gonna be like, oh, I could get in here when you shouldn't have got in there. And that's, well, not that you shouldn't have got in there, but you normally don't get in that same spot when you're going long. And then the trade goes against you and you're like, fuck, that's my grade A setup. Why didn't it work?
Yeah, but up until like 1 or 2 weeks ago, my biggest win was a short. I made, I think, $867 on a short, but I've made way more wins on the long.
I see. But did you get in short because somebody else is biased, or did you get in short because it lined up with your strategy?
Both, because Brandon recognized the trend is going down. I can tell you what day it was. It was on November 23rd. It was the day before Thanksgiving.
Yeah, but what I want to try to teach you is not to depend on Brandon. Not to
Yes, that's what I'm trying to learn.
Not to depend on Connor, not to depend on me. You want to develop that bias. You want, because if Brandon wasn't there, would you be able to see the trend short? Probably not.
Well, that one, yes, it was so obvious, but yeah.
Yeah, no, but that's what I'm saying. The point is that without somebody being there, you probably won't. Just like Easy, he can't see longs with his strategy. He can't see longs, even though we say, "Hey, Easy, this is your grade A setup long," and he's like, "What are you guys talking about?" And he's slowly gonna start picking it up. He's slowly picking it up because his brain doesn't know what a long pattern looks like with his setup. But I don't know if everybody's the same. You might not be the same, but that's the way I was. That's the way LunatheCat was. That's the way Easy was. So I'm starting to see a pattern here where you might think you can play both sides, but without somebody's bias or professional opinion, because I would call Connor and Brandon professionals, we probably wouldn't be able to see that. And that's what I'm trying to do. I'm trying to take their strategy and their lessons that they've taught us to instill it in you guys to be like, okay, today Brandon's not on, Connor's not on. Am I trading or not? You know, oh yeah, I can trade because I have confidence in my strategy. I have confidence in my game plan that it's going to work out. Not be like, oh shit, Connor and Brandon, they're not streaming today. What the fuck should I do? I don't want you guys to be in that mode because your emotions are already getting built up because you don't have that guidance there to be like, oh fuck. Oh no, it's going long. Oh no, it's going short. Oh, which way is it going? And that's where I want you to, like, hey, cut that dependency off that alcohol. Cut that dependency off of Brandon and Connor. You already have your strategy. They taught you that strategy. I'm thankful that they taught us that strategy. Now I can go trade on my own. If for some reason Wisconsin and Michigan blow up and they're no longer with us, are you still able to trade? I want the answer to say yes.
I can, but just not as good.
Well, we're gonna get you good. We're gonna get you there. But like I said, I want to cut off that dependency. And you have your own game plan. You have your own strategy. Even though it's their strategy, everybody has a variance of that strategy. Even me and you can have the same standard dev strategy, but my eyes and my brain picks up handles differently than you do. And you might go in the trade where I might not go in the trade. And it might work out for you. But I was like, damn. And then next thing you know, you're posting your winning trade and you're like, damn, I should have took that trade. But you saw something in that chart that indicated you to buy or sell, whatever the case is. Exactly. They do know a lot more. Not only that, they have 10, 12 years of screen time. They have candle development. They have pattern development. And that's what that whole trading in the zone is. You know how Brandon always says, oh, it was gut algo. That's what you're doing. By simplifying the chart, applying your strategy, you're building that good gut algo, right? Trading in the zone says, keep looking at that good pattern. The pattern that is best, your grade A pattern. Keep looking at that. Keep looking at that. Why? Because you're going to develop that gut algo. After a couple of years of just seeing that same pattern over and over and over and over again, you're going to develop that gut algo. You might not even need a game plan, but that's a few years down the road where you just click it because your gut algo is developed. Brandon's gut algo is fucking on point. He can call squeezes and he can call scams like no other. I haven't seen a trader call scams and squeezes like he can. Oh, how do you know it's a scam? Ask that question. Ask Brandon, hey, how'd you know it was a scam? I asked the same question for 3 years straight. How'd you know it was a squeeze candle? And he would say, oh, it's just my gut algo. Well, okay. Well, what did you see? What did your eyes see? And slowly, every time there's a squeeze candle, I would ask the same question. What'd you see? What'd you see? Okay. And then every time I would see a squeeze candle, I would ask, and he would say, well, I seen this. Okay, I'll write that shit down. Next time, okay, I would go research. Okay, what does volume when the squeeze candle happens, volume looks like this, what other stuff can I use? And I would just, like I said, I wouldn't go try to change my strategy. I would just pull information from those videos that complements the elite strategy or your strategy. And I want us all to be able to call a squeeze or a scam candle. It is screen time. They got 10, 12 years. I got 5 years of screen, and I've seen my gut algo getting better and better and better. But the only way you get better is screen time, asking the professionals those questions as what did you see or what did you pick up that signaled that squeeze candle. We're slowly getting there. And I'm trying to just bring everybody with me. Instead of taking 5 years to develop that gut algo, let's develop it in 3 years. Or let's develop it in 2 years. You're never gonna develop it in a year, that's for sure. You might. I hope I can get you. My whole goal of this finding your way is to speed up that learning curve. Speed up that learning curve so you can get consistent way faster than it took me. It took me 3 years to be consistent, 3 years to break even, and then 3.5 years to be profitable. 4th year, I was profitable. 5th year, I was more profitable. This year is my best year ever. But you just slowly add up the base hits. Brandon always says, base hits add up, base hits add up. They sure do. Here and there, you'll have a home run. It's like that Moneyball theory, right? The Oakland A's, I'm an Oakland A's fan. They took a team that all they took is their high consistency of getting on base. And then here and there, they would hit home runs. And look, they had a 20-game win streak or whatever it was. But it's just adding up those base hits. I think that does it here. Cool. Any questions on anything? We could recap. Any recaps? Dell, Kelsey, or anybody? Anybody got recaps? LunatheCat got a recap?
I'd love to see some screenshot from the newbies. I want to see some screenshot of of their strategy so that we can discuss it or anything.
I can definitely, I have basically a full week. I can actually show you guys. I think I posted it on our other chat for Monday, Tuesday, Wednesday, and Thursday. I did not get a chance to post, but I do have them here with me.
Do you want a screen share? Or
Sure. Which yeah, I can start with Monday.
whatever. Either a red
sure.
trade, green trade, best trade, whatever. Red trade.
Monday was both. Started 2 red trades, and actually on my 3rd trade, I was able to clear and come out green.
Nice.
So
just FYI, one of my rules is if I have 2 red trades back to back, I stop trading. Doesn't have to be your rule, but I would
Well,
definitely
no,
try to
what
implement.
my rule is, if it's a red trade, I just walk away. I stop, I give myself like an hour.
Yep.
Reprocess, recess, because at the end, I think at the end of the power hour is when I was able to actually go green.
Awesome. No, as long as you have a rule around that, everybody's gonna have different rules. Whatever your risk tolerance, whatever it is. I just need you to have a rule. I don't want you to be, okay, I'm gonna take red, and next thing you know, you have 3 reds instead of just 2, or whatever the case is. And instead of $100, you're $300 red. But whatever your rules are, they're your rules.
Let me know if you guys can see my screen.
Yep.
Okay, so I took your advice trying to use OneNote, which actually does make things easier. 'Cause, once I'm logged in, it shares everywhere, so that makes it much easier.
Yep.
So this was my first trade, like around Monday, 9:02. Let me make this bigger. I wanted to get in with the 2 contracts, and basically I was using the trend line with the fair value
Mhm.
over here, because usually I draw the lines on the fair value so I know the extensions.
Yep.
So when I saw that and I saw it holding on the trend line, I actually was able to get in. I saw the 50 holding, I saw the RSI go up, and I'm like, all right, great. Everything looks good. I see green. This is a go, take off. So I got into the trade, 2 contracts, and it didn't go my way. Actually, I wanted to get out at the top part, red value.
Mhm.
It started to go up, and next thing I know, went down. And as you can see, from the stop right there, that was at like 5.5 points. It was 2.5 points. I got out because I'm not. That's the stop limit. 2 to 5 was basically what I'm shooting for.
Yep.
So that was my first trade. Second trade was right here, where the fair value gap did show up, and I'm like, okay, let me get in over here. And I actually, because of this red value, I also had another 2 to buy 2 just in case if it popped, because I saw the trend line again, saw the trend, saw everything going good, was ready to make go up. And with that, actually, as you can see, this is the second part of the trade where I picked up the contracts. And I'm like, all right, this is great. I'm gonna sell 2 at this line and then sell the rest 2 at my other plan. It hit the bottom. Once it hit the bottom actually of the red value gap, because that was my stop out, this was my profit.
Hey, Dell, just a quick
Yeah.
question. What is your strategy? Can you explain it to everybody?
Well, fair value gap, basically, let's use the first one. You see the green bar here. This green bar, once it starts forming up, see the screen? Is the screen good?
Yeah, you're good. You can make it a little bigger.
Okay. So I see the green, basically I wait for I see how the candle closes, especially when this wick, that's called like liquidity. And then on the next candle, if there's continuation, this is basically what starts the fair value gap, because of this the liquidity and the market continuing to cover the liquidity. So from right here is where I would usually enter on the fair value gap and try to shoot for 5 points. Same thing can happen in the reverse also. If this wick was in the opposite direction, where it was still this long, but then you have the wick showing down, that's a reversal.
Yep.
So that's what the fair value gap is. When you have the indicators, it also identifies it for you.
Yeah.
But I try to pick it up prior by seeing the way the candle forms.
Yep.
And it definitely depends on the next candle. Depending how the next candles form, you'll know if you're going to have a fair value gap, or if it's just it's going to channel back and forth, or just stay in the zone.
Yep.
Once you see it, let me get a little closer. once you see that the next candle is not actually above the wick, but right where the action is, and it moves up, that's how you know you have a fair value gap. So that's basically it within a nutshell. There's still more that I am trying to learn, but that's the basics of the fair value gap.
Stay right there. Stay right there.
Go ahead.
You said this was a red trade, right?
This was a red trade, correct.
One of the things that I noticed is a lot of the fair value gap traders, they don't look at the liquidity that's near that fair value gap. They look at the liquidity previous, like over here. Not necessarily big wicks, doesn't have to be liquidity, but if you said you stopped out around this red, right?
I stopped, yeah, right where the green, the bottom part of the green actually. That's where I set my stop loss.
Because usually how it happens, it'll take this out and this out. So if it comes down, it's probably gonna go to that level. You know, maybe these 3 weeks right here. It's gonna go to that, it could go to that level. And that's where it can pick up before it squeezes back up. That's what I'm saying. If you had it right here and your stop is right here, your stop might have been a little bit too tight because you actually should have been getting in around the midpoint. One of the rules that a lot of fair value gap traders use is if the body closes below the midpoint, like right here, let's just say that candle right here came in closed below the midpoint of the fair value gap, that throws that fair value gap out the door or out the window. They won't trade it. They won't trade it at all. So I'm not sure if you've seen that, but maybe pay attention to that. Don't use the liquidity like that's in that zone. Because this liquidity right here, this is the way it usually goes that I've seen from my experience trading this system or this strategy, is it'll pull back to this level back here, or even like, you know, you said these wicks right here, it can pull down to those wicks. But sometimes I don't even trade this choppiness just because it's so choppy. And I notice even with any play, this goes with any play, the choppier it is, like all this chop right here, it's gonna muddy the water or your strategy. You want to see a clear leg, like a beautiful clear leg, like right here. This is a beautiful clear leg, right? That goes up. There's a consolidation zone over here. And it always takes out this, always takes out that. Those are shorts. Shorts are waiting right here. And look at what happened. It went to that level and it went down. Because why? Shorts were waiting right here. Same thing over here. You said there was a hammer candle. Are you talking about this one? Judy said there's a hammer candle.
Yeah, I think that's
Yeah,
what
that
she's
one.
talking about.
And that goes, remember I was telling you about dojis? Look at, there's a doji right here. I don't know if you have a screenshot of what happened, like where did price actually go down to?
The next one was actually the screenshot, because that's where I got stopped out since I placed my stop loss right up below the green. This is it right here.
Let me see.
But no, this was no, I didn't get the screenshot. This was the other play that I've taken actually that got me to back to green.
Yeah.
So I did not take the screenshot after.
Try to take a screenshot after to see where it played out to be. Because it could have been like these wicks right here, but those wicks line up with the doji right here. Remember I was telling you pre-meeting was the doji levels? Because it'll line up with those wicks. Because it could have came down because you got liquidity there, but you also got liquidity here where that hammer was that Judy identified. That's a shit ton of liquidity. Because you got this big motherfucker right here. But these right here, it could have came down and then shot up. Because buyers right here were not filled. So it's coming down, filling those orders, and then shooting up. But I'm not, that's hypothetical because we don't know what happened. But if you can provide an aftershock, the results that could help you identify better plays.
Okay.
And another thing that I like to see, because you have this big green candle, right? And the way that the way that I'm training my eyes to identify fair value gap is, okay, there's a big candle, so I know there's going to be a fair value gap. And then I'm looking at this green candle right here. I'm looking at this green candle and I'm just waiting for that sucker to close because I know it's going to create a fair value gap, whether it closes down here or down here. It's probably not going to close below here. And if it does, then, it kind of invalid. It won't create a fair value gap. But as soon as this candle closes, it's going to create a fair value gap. I usually don't like to see the price action right away test it. I'd rather it pull away from the fair value gap a little bit and then come down and test it. And then it'll go up. But when it tests it right away, like this fair value gap, it's probably looking for liquidity to the left. And that's why I'm always telling you, look to your left. Look to your
Okay.
left. Is there any previous structures that it can take out? And maybe if you squish this down, maybe there was like a candle over here. A zone over here where it could have just lined up with it. Because if you can find structure that can line up with the middle of that gap, then it most likely will hit that middle zone and bounce.
Hey, you can't scream, okay? Because I'm gonna
But
take my lizard.
awesome trade, awesome. Thanks for sharing.
No problem.
Hopefully, test it out. See, if those tips help you. If not,
No, definitely.
figure something out. Do you have another trick? You said you had a green trick?
Yeah, this one was after I think we spoke. Was it this one? This one was after I watched the video, and this was during Fed Speak.
Yep.
This was the one trade that I am so proud of because it was one trade. I didn't deal with anything else because I knew market was, they were gonna have the piles, and I didn't want to get involved in it. So basically, like I was telling you, I was getting that FOMO because I'm like, there has to be something. I want to try to get something before Fed Speak. I want to try to, at least get 5 points. But the way the chop was going, nothing ended up happening. And then boom, at 2 o'clock, this started shooting up, and I'm like, dang, I could have got in. I should have got in. This would have been perfect. And you sent that message where always have a plan, always have a before anything, talk out your plan. So I waited, and when I saw this green candle, and it's funny, out of all the green candles that I saw, that one really stuck out to me. And I'm like, okay, I think this is where a fair value gap might come up. So the next two candles actually came up, and this is where I got in over here. Oh, I can't move it over. I got in over here on the price when it came down. I said, you know what? I'm gonna wait to see what ends up happening. If it disappears, it's fine. The whole plan is wait for it to touch the fair value gap, and I should be good. So it did come down. I had got into 2 contracts. No, actually I had 4 contracts. And I actually closed 2, but since everything was going and the way it was moving, I didn't get a chance to shoot a screenshot yet. So I was able to close 2 of them over here at 11 points, and then I was able to close one at 15 and the other one at 23 points.
Wow, awesome trade. You notice something between this trade and your red trade?
Not really. I mean,
You don't see nothing with price action that look different than your first trade.
as far as price action,
Yeah.
No, I don't. I'm not gonna.
No, remember I just said that I wanted to pull away from the Fair Valley Gap, come back and
Correct.
test it. This
Yeah,
play
okay.
was more concrete, I guess you would call it, because it
More
pulled
stable.
yeah. So I came back and tested it because it pulled away from it, but it needs a magnet down to it.
Okay.
You know what I'm saying? So this is a picture perfect play because it pulled away and then it came back and tested. This is your perfect picture, your grade A setup. That first one you showed, it went against you, but price action was so tight that that Fair Value Gap kind of didn't have strength. It didn't have strength because the sellers were so close that it kind of did like a tug of war where it pulled up, but it was so tight that it could came down to a structure down here. And not
Okay.
only that, there was no structure over here compared to your first one. Your first one, there was structure here and there was structure here. So where's it gonna pull back to that structure? Even though it,
Oh, okay.
know what I'm saying?
Yeah, no, it's making sense now. Okay.
Just hey, take it with a grain of salt and see.
No, no, it's
If
good.
that's
It's
a great,
good.
if
I'm
that's a
actually
grade A setup, use it. If it looks like the other one, maybe don't. Maybe that might be your B grade setup or your C grade.
okay.
But just test it out. See what it plays out to be.
Hold on a second. I'm just gonna take a screenshot.
Oops. Yeah, I like that trading laws. Laws you need to abide by.
Yeah, you have to have this.
Yeah, definitely, definitely.
Okay, cool. Sorry.
No worries. Take your time, man. That's what we're here for.
So yeah, okay.
But yeah, test it out. You want to share one more trade to see if does Kelsey or Luna have any trades?
Guys, don't let me be the only one, please.
Just share them real quick. Or just post it in the chat, Luna, and then we can critique it and you can watch the recording later if you have to cut out. Kelsey, do you have any trades? Yeah, you can post it here in this chat or a different chat and I can bust it open and we can critique it. And you can leave and then you can watch the recording later. Okay. All good, all good. Luna, are you gonna post it? That's not Lasagna Cat or anybody have trades they want to recap?
Hey, nope, I have nothing this week. I have nothing because everything is freaking bullish. So, nope.
And nothing here either. I stayed away from the market this week because my mind wasn't right for it. But things are looking up, so you can expect me next week to have a little bit to display for you know what I mean, some recaps.
Sure. Anybody else have any trades? I can recap. Yesterday was my best day. But I want to give you guys the opportunity for me to recap your trades. If not, I can jump into mine. Ooh, it's a little blurry.
Okay, can you hear me?
I got you.
Okay, so it's blurry, but you can see. I got to get the Evernote, whatever, working. It's not, so my bad.
All good, all good.
So I'm trying to see what I did. more than I'm trying to. Obviously, I bought one. It was going up. I bought another because I thought I was probably looking at a standard deviation. I'm trying to find it on TOS right now.
Mhm.
And then when it probably hit a, let me see if I can find that trade. That was today, right?
If you trade off of TOS, take screenshots of that
Okay.
instead of your actual trades, because the only thing that NinjaTrader has as a standard dev is the order flow VWAP, and it has a standard dev combined with the VWAP. But the standard dev on NinjaTrader, if you could look at my screen, am I sharing? Oh, I'm not sharing. Hold on a sec. You guys see my screen right here? It's kind of,
Yeah.
let me zoom out a little bit. Oops. See these wavy lines right here, Kelsey?
I think he just stepped away.
Anyways, this is the standard dev. See these waves right here, Kels?
I'm back. My dog was barking, so
No worries. See these waves right here?
yes.
They're the standard dev, but they're not straight lines like they are on TOS, like the ones we use. But these are exact same. It's VWAP right here, and it's. I believe you have to have the lifetime license. I'm not sure if it comes with Apex or any of them, but it's this one right here, the order flow VWAP. And see how it says standard dev 1, 2, and 3. So it does come on NinjaTrader, but you might not be used to how they look wavy instead of straight like they do on TOS.
Yeah. So I can share screen my TOS.
Yeah, go for it.
Okay. Let's see if it comes up. Where is it at? This one? This? Can you guys see it? You guys see my arrow?
It looked like it might be sharing a little bit. See a black screen, but hold on. There it is coming through. There we go.
Okay, hold on. Let me move this over here. So right here is where the trade took place, right? So what I trade off of, it's
Yeah, please explain your strategy, your standard dev, and
yeah. So hard to tell the lines. So these lines, these red lines, are the standard dev. So 1 dev, 2 dev. That's the volume, right? That's the bottom of the volume. This is the volume profiles, right? This dot right here, that's the POC.
Mhm.
That might be a trend line, is probably what I think it is. No, that's okay. That's the next standard dev. So what happens is that on that particular one, it probably crossed over this. I'm trying to find the time over here. I think it was at a couple of my times are wrong because I'm on Hawaii time, gang. Sorry.
No, you're good.
So let me go try to find the time. The time I think was here was 5:30 in the morning, which would be, 10:30 Hawaii time. Eastern time. So it crossed over one of these. That probably that's the see that white line right there is the mean, right?
Yeah,
That's
the
the
middle.
mean.
That's the middle,
Yeah.
right?
Yeah. And so what happens is that is a pretty strong indicator. And I learned the standard dev from Connor 3 years ago, right?
Yeah.
So all of my trading is based upon the standard dev. So when it goes up, generally speaking, right, it's going to at some point go down.
Yeah.
And that's why I use other indicators, because like that orange line right there is the line, the high low of the volume. So my guess is probably, again, I can't see it on exactly when I sold the trade, but it crossed one of my lines and I was already up. Just so you can see the picture that I sent was just one contract, right? I did one contract, then bought another one, then sold it. Because per the strategy, when it goes past here, and I was using probably this orange line as the get out of my trade, right? So I knew that as it was heading towards the standard deviation, I could get a play. So how long, like you were saying, if you get out for no valid reason, the next standard deviation is way up here. That's way too long, right? I can't wait for that. So you can set a half deviation, but I like these other indicators. They tell me, okay, right around there is when I want to get out. That's 75. I think I got it at 76, if I'm not mistaken.
Yeah.
I don't, let me see what the picture is. I think I got it at 76. And so I got, as soon as it crossed that, I'm like, okay, get out. But it was going, I'm greedy just like everybody else. I'm like, oh, let me get a little bit more. Let me get a little bit more. And so I got out and got out. I saw the one, and I think I took a little bit of that red candle and then got out on this green candle. But that's where it is. That green candle, that's at 77. So I probably got the second one. I got out just when it got green, I got out. Because I'm, that my only indicator, that's why I use the volume. I like the volume. So I use the deviations. Okay, it's going to head here. So like now, if I was trading, it's going to go up here. It's going to come down. Now you want to maybe look at other things of what's going on, right? The volume's down here. There's a TTM squeeze. There's other things I can look at. But generally speaking, the simple strategy is if it crosses that mean, it's going to come down. And that's from Connor. Connor always said, go the opposite. Go the opposite. So I knew it wasn't going to completely go the opposite because it does have to got to get time to sort of settle over the mean, this white line. And so I was using that orange as my secondary, get the heck out of this thing. And so as soon as I got to 76, that orange line is at 75, if I'm not mistaken. And so as soon as I got to 76, I'm like, get out, get out. And so I got out, and then sure enough. But the strategy, the reason why I told you sometimes I play both is because I wouldn't play this because to me, this is not a strong setup, right? It's relatively choppy. But so what I would do if I really wanted to play this, I would go on sim. And then I would say, okay, I'm going to play the short on sim going down this deviation. But it wasn't, to me, this is a C or D setup. It's not really that strong a setup. The only really indicator I have is it went past this deviation, right? And so, and I know based upon everything from my strategy is it's going to go down. Now, the truth is it went do pretty big, right? And it hit that, I think it's the 100 EMA, that green is the 100 EMA. So, I mean, that's a decent strategy. But again, the hardest part for me, just using standard deviation, I have two big problems. Number one is what's happening with the market, right? And that's what I use Brandon for, kind of give me an idea with his VIX and POCs and all this stuff that I was talking about, right? All the gap fills and all this stuff, right? I haven't got that down yet. But so he does. So until I get that, I'm not going to take a trade like this. It's just to me in the middle of nowhere. Take this trade. That's crazy, right? But in the morning, right? This down one here, I don't think I took a trade because I'm like everybody else. I'm like scared, right? I'm not going to take a trade first thing in the morning, and it looks tantalizing. Look at that big old drop. Yay me, right? I could make money. And now I did this, go down to this blue, the low of the volume profile, right? And so you could get a pop on there. So I thought about that, but then where's the exit? To me, the exit would be the POC. But I didn't take that trade either. But so I'm trying to develop a strategy. So for right now, my strategy is, and this is just, I'm just being honest, right? Find out from Brandon what the heck's happening with the market in general. And like if it's going down or if it's going up, I use my deviations. There's one, there's another, the mean is another. And I use these deviations to at least to enter, right? Okay. So right here, right? Again, if you use the deviation strategy, it went up and it's definitely going to go down. So here's the deviation. And if Brandon is saying, oh, it's got to fill this gap and do all these things, that would be a setup. But I'm afraid to take it in the morning, first thing, right? I don't want to be one of those guys, but I could have even taken it here before the market opened. Yep. And it could have ripped down. But again, I don't really know what's happening in a really confirmed sense until I hear Brandon figure it out. And I'm in Hawaii waking up at 3:30, gang, to play this market. So sometimes I'm a little late. So I go here, I don't drink coffee. And so that would have been one for me, but then also the bounce off of the bottom blue, right? So that's my strategy. I need
What's that bottom blue? That's the
volume, the bottom of the volume,
okay. So
right?
let
Oh,
me.
Yep.
Can you do me a favor and remove that volume profile for right now?
Remove the volume. Okay, hold on.
Just that all the volume, just to kind of clear up.
Yeah, I'll clear it all up.
The other way. Kind of stretch it out. Go to the price level and stretch it out.
Yeah.
Okay, perfect. Go back to where you were trading.
I was trading at 10. Sorry, wrong way.
No worries. Keep going, keep going.
I think it was 10:30.
Yeah, right there, right there. Stay right
Right.
there. Okay, so I'm gonna annotate. Hopefully you can see this. So this is your standard dev, right?
Yes.
This red line
Yep.
and to this white line, right?
Yep.
Nope.
That's the mean, and that's the -1.
Okay, so the way that we've been taught to trade this not from Connor, even though Connor gets in on certain levels, this is a confirmation that I'm talking about that I want you to look for, and you're gonna be able to catch bigger plays. So you see higher lows, right? Here's the base or the low,
Yep.
and then you
Yep.
see a higher low,
Yep.
and then you have your standard dev right here.
Yep.
Right.
Yep.
So the confirmation part of the standard dev system is break that standard dev system,
Yes.
break it, and then come down, confirm it right here.
Oh, okay.
And then your target is the next level.
Yes.
So
That
your
was
level will go right there. Boom.
right. That was my play. Correct. I didn't see it as the confirmation thing. To be honest, that never entered my mind. I just was waiting it to, like you said, just getting used to it. Right.
Yep.
So I know that at the big candle next to the confirmation,
Mhm.
that told me this is for real. Right. So then at that point, I think I got in at 73 or 74. And my theory was it was going to break the mean and go up to the orange, right?
Yep.
And then get out. That was my
Mhm.
theory.
I think, I don't know for sure, but if you can test this out for us, is wait for the standard depth. This is what we've been told, is that it usually never goes to standard depth 3. It rarely goes to standard depth 3.
Except when Powell speak yesterday.
Yeah. So during those type of catalysts, it
Yeah.
does, the price action does abnormal stuff. No matter what strategy you have, it's going to
Right.
either smoke your fair value gap, or smoke all the moving averages, or smoke the standard depth.
Yeah, so I like to play between the mean and the first deviation.
And those can be plays, but you want it to get strength, so it breaks that level, just like with any confirmation.
I see. Okay. That was my question, is how do you determine what you determine strength as? Because I think I just do it intuitively by playing. I've done deviations hundreds and thousands of times
Mhm.
From back in 2020.
Yep.
Right. I learned from Connor. I don't think Brandon was even around or he was, but I think he was doing something different. Connor was doing penny stocks and general stocks.
Yep, and
This system.
Brandon was doing large cap and mid cap.
Yeah.
Um,
And Brandon talked too fast for me. I couldn't follow.
It'll take some time, especially learning the lingo. That'll help.
Yeah.
That'll help with picking it up quick.
Okay, so let's go back to the trade. So you said it went over the deviation,
Yeah,
and then it touched it on that recap at about 10:25,
Yep.
And then it gains strength with the next 3 candles.
Mhm.
So,
But it's
again-
gaining strength because, I mean, the picture perfect confirmation is go up or bust through that level, no matter if it's fair value gap, whether it's moving average, whatever strategy you have, you want to see you bust through that level, even with regular trend line, any kind of trend line, right? You want to see bust through that level, come back, retest that level, and you can either get in at that level if volume and other catalysts stack up. But for now, I want you to test out and I want you to confirm or just say, hey, it's not working out for me, is bust through that level, which is your standard dev, come
Yeah.
back, test it, get in, and then go. Your target's going to be the next level up above it.
The only difficulty with that I see is that's a huge move. You're talking about from
It
40
is.
47.68 to 40.74, almost 75, right? That's a 7-point move.
Hey,
That's very rare, except in the early mornings. And so I'm uncomfortable with taking that and saying I'm going to stay in for that. I'd
No,
rather
that's fine. No, that's fine. Don't remember what I said in the beginning of the meeting is for this week, lock it in at 4 to 6 points. But you want to get in after it retests this level. After it retests, after it confirms, because the confirmation is the part that tells you that it's gaining strength. If it doesn't confirm, like let's say here's the first confirmation, right? And it's confirmation because look at what it did. It got sucked up right away and it created a doji. So you know that's building strength. And if it comes back and tests it again, like right here, you know these guys, look at right here, here's a beat right there, down here in the volume.
yes.
Even though it's white, I see that as green, and there's a volume beat.
Yes, but on that doji that you just circled there, that would be a potential area for a built-in stop loss. And so
What doji? This one?
this one, yes. So like if you went in, let's say I went in here, right? And at 47.75, 47.70.55, right?
We'll say
So I
50.
went in and let's say my stop, the way I would do it is I would put my stop loss probably right at that deviation, right where it hit. So I would be bopped out. So I would make some green on that candle. It would go up. I would suffer through that, make back a little, then I would be just devastated through this red candle, right? Which is why I actually kind of waited. If you look at my trade, I think I entered at 47.25. I entered 74.25. I entered about here. I think at that moment, this white line was a little bit lower, right? In the midst of the actual trade.
Yeah.
Right. And so I think I entered, just like I said, right before the mean. But if I had gone in here and followed that path, my fear is it would have stopped me out on that candle. That red candle down would have been my stop loss point. All right. And so that's what scares me.
But your entry is not gonna be up here.
Where?
It's not gonna be up there.
Then where would it be?
I want your entry to be at the standard dev.
Gotcha. Okay.
And then whatever your risk tolerance is, I would honestly use that wick. I would use like one tick below that wick.
Yes. Yeah. And a lot of times, if I did enter this early in it, right, I would put my stop loss at a fairly significant level below the deviation because it does bop down there, right? You know, it bops down there. It does. It tends. Whoa, sorry. It tends to bop that deviation a couple times, like you said, as a confirmation. And so, knowing that just kind of instinctively, I would move my stop loss to a little bit below the deviation. Therefore, and the truth is I probably would have put it, if this is the candle we were talking about, I probably would have put it probably about there, right? So I put it there, it'll survive that, and then game on, right? Boom, boom, boom. Then at this point, to be honest, what I like to do is I would buy 2 contracts right? So like you said, if we did it, right, you said, right when it cleared the deviation, I'm up, up. And then at this point, I probably would have took one because I'm up. Give me some money, right? Then this goes down, my stop loss is down here, and then go, and I run that. And I probably would, to be honest, when I got to here, I probably would have gone out. I probably would not have held it. But that's what you talked about, not holding it. I just like give me the money.
Yeah, and that's the greed side of trading. Like
I'm sorry, I disagree. I think that's the smart side of trading, but
you want to, well, it's either greed or fear. It's either or, and they're both bad.
no,
Right?
I'm sorry. I think it's intelligent. I think it's greed if you keep it in. If I already made one here, I made a good profit here, and I made a good profit on this. Once it cleared that and it's here, I made another good profit, right? You're talking about
3 points.
1, 2, 3 points. So that's not, to me, that's intelligent. I just made, if I was playing 2 contracts, I just made $600 and I'm out. And all I would have made if I stayed in past the deviation is another 3 points, right? I think that's the greed. To me, the greed is here, waiting for it to go over the deviation to greedily get all your money.
No, it's not. It's not about getting all your money. It's strategically getting in and getting out. So yeah, you can lock in.
I think the strategy is here.
75. Yeah, but if you show your trade, you only caught 2 points. Which, 200.
No, because we got in. No, because we got in here. We got in at 68 according to the theory, right?
No.
I went all the way up to 75.
I'm talking about your actual trade. Your
the actual trade
was only 2 to 3 points.
Yes, it was mini. Yes, it's very mini. Yes,
it's
very mini.
Small. I want to teach you to catch 5 points at least. That's $500 on one move. And it's not even about getting greedy. It's about being smart with your entry and being smart with your exit.
But that would have been the move. If I entered it right there at 47.68, let's say 50, even move it up to 75, right? Then and I got out here at 73. That's a 5 point. That's a 5. That's what I'm saying. But that's what I'm saying. That's a strategic exit, rather than wait for it to pass the mean.
No, I'm not saying to pass the mean.
Oh, okay.
I'm saying lock it in right here. Lock in 50 to 75%.
Yes, I agree. Yes.
If you lock in 50 to 75%, guess what? It has to come down all the way over here to get you red.
Yes, 100%.
So what you're doing is you're getting in a smart location once you get your confirmation, right? You get your confirmation. The confirmation is the tag of that deviation.
Correct.
Or the tag of the fair value gap or the tag of the moving average. The confirmation never changes. It's still the same thing. It's still a particular level that confirms down. And not only that, I'm going to teach you other stuff that you're going to stack up with your standard depth. I could tell you one thing right here. This little doji right here, if it holds that level, guess what? That's confirming your standard depth. Yeah, you didn't have to get in here. You probably would have got wicked out. Yeah. This is a stronger level. Why? Because it wicked up. Even this big wick is telling you there's buyers coming in.
See, that's one thing I do not know.
And that's what I'm trying to tell you. I'm not trying to change your strategy. I want you to test out these points that I'm telling you to see if it works out and you can actually catch the 10 points. So the 10 points are not going to be greedy. 10 points on the 10 points on ES, that's a normal play.
Repeat the principle of those dojis. That means what exactly?
Dojis to me sound like a tug of war, right? Nobody wins. Left, it's just like red and the buyers and sellers just tugging, and nobody won. Nobody won on this doji, on this particular doji over here. This doji, and this is where candle development comes into play. If this doji opened up right here, it came down and immediately, like instantly gets sucked up. That's telling you in your head, buyers came in and swept the sellers. But
okay, so that doji line down, followed by a green candle, means a lot of buyers.
No, just the wick. what
Right,
I'm trying,
right,
what,
that line down.
what I'm trying to teach you, even this one down here, even that doji, like that's telling you buyers are coming in. Why? Because it's a buyer side doji, right? The sellers pushed it all the way down and they got sucked right up. And guess what? The next candle is a green doji. So strength is coming in.
Okay,
Right
so those,
here, right here, the way that these two candles developed and busted through. Look at this big green candle. When
Yep.
that's the type of candle that I love to see bust through a level, just with the fair value gap. The fair value gap for Dell. I love to see these big green candles and then create a fair value gap right here. Price action, pull away, come back and test it, and then keep going up. That's
Okay,
the
so-
confirmation for you.
so the dojis followed by a green candle is a decent sign that buyers are jumping in, and it may back test, but it's gonna go.
Exactly, but what
Gotcha.
I want you to pay attention is these dojis right here. Not even, it doesn't even necessarily have to be a doji. It could have been this red candle right here, right? But did the price action immediately get sucked up? Like you seen it go down and then it just like instantly got sucked up, right? And then they started battling right here. They started like, okay, sellers, who's in control, right? So the buyers won this tug of war right here, right? Because right here, it was a tug of war. Sellers up, tug of war, buyers up, and then sellers
Mhm.
pushed it down. And then this one right here, guess what? Tag that confirmation. Whatever that level is, it came right here, tagged it because of what? Why am I calling this level a confirmation? Why am I calling this level a confirmation?
Oh, because I thought you just told me because of that doji and the green candle.
No. I'm calling this a confirmation. The definition of a confirmation is bust through a level, come back and confirm that level and hold that level. That's the definition of confirmation. These candles right here busted through that level, right? There
Mhm.
was a battle because it was red, green, red, green, red, green, right? There was a battle, but it's telling you, okay, the buyers are winning. The buyers are winning, okay? The buyers are taking profit. What happens when a long player takes profit? They have to sell, right? They have to sell to get out.
Right, so it goes down.
So it goes down,
Right.
confirms this is a better spot for buyers to get in. So again, strength coming in. These are buyers taking profit. That's like you taking profit. You enter down here and you're taking profit right there, right? So where is it gonna go to? It's gonna go to a significant level, whether it's standard dev, moving average, whatever it is. It's
Mhm.
gonna come down and confirm strength. And I bet you this candle probably opened up right there, came down, got sucked up. And if you see it, that's what I'm trying to train you guys. Look at the candles. The candles tell you exactly what's gonna happen. Did it get sucked up or did it stay down here for a while?
Oh, it got sucked up. And then another doji came in and went down a little bit and then it got sucked up. And yeah, you're right. If I entered at the deviation at 68, at 67.99, I'm looking at it right now,
Yeah.
68. And if I rode it all the way to the next deviation, that would have been 68, basically 68 to 75.
Yeah, that's 8 points or 7 points.
7 points.
Yeah.
And if I'm playing two contracts, shoot, if
That's
I'm just playing
$700
one
bucks.
contract, yeah, $700, game over, bye.
Exactly.
I'll
That's
watch
what I want to try. Instead of catching just two, instead, like Dell said he had 2 red days or 2 red trades, right? But his optimal grade A setup played out. And guess what? He turned a red day into a green day because he caught 22 points. That's what I want you to do. I want you to be able to catch 10, be 10 points up. And you're like, what the fuck? That's amazing. You can easily catch 10 points. You can if you can easily catch 10 points, you can easily catch 5 points. And that's why I'm capping you guys off at 4 to 6 points. And then look,
Yeah, no problem
like,
with that.
like get in right here and it goes up. Okay, what did the candles? I locked in right here because I started seeing a big red wick. and I started seeing the candles get weaker because these are full, right? This
Right.
is weakness. Is they're getting smaller, or that's just when it's doing this, that's market makers slowing that shit down to confuse the fuck out of you.
Now, generally speaking, my habit has been, okay, let's say I got in at the deviation, and let's say I'll make it easy. Let's say I got in with 2 contracts. I would sell one at this candle right here. I got in here because I'm not trying to make a bunch of money. Let's say I got in, well, let's say I got in here, right? Like we said, 68, and it went all the way up to here. I would sell one of the two. I would sell one of the two, take my money, and then I would just manage my way through this, right? Like you said, it'd have to go all the way down here for me to lose money.
Yep.
So that is my general strategy. Get in at a good point, and if I catch a ride, I try and go 2 to 4 contracts, depending how confident I am.
Yep.
And then I sell half of them at this spot, at something like that, and then I let the other ones ride. And then if you ride, you could get a bunch of other points. And on this particular trade, right, I bought one at 74.25, so I bought it little high, but here, because I knew it was going to hit. I knew it was going to hit the mean, right? That was what I thought. So 74.25, and it went up. And then I bought another one at 75. So I bought 2 contracts, 70 right before the mean, and I knew it was going to bounce over. And as soon as it bounced over, I took them both at 76. Well, 70, 75, 75, and 76. So right, both of them here and there, right? 1 and 1, out and out, right? So that, to me, that was what I would consider a pretty safe move. But the better move is what you just described. Is I didn't realize this doji followed by a green was such a good confirmation of what to do. That's huge.
It's not that the doji is a confirmation, it's that it tagged that level, is what you know what I'm saying? Yes, it tagged your standard dev level right there.
Okay.
That's like, okay, you could have got in there and rode it up to here, and you could have got out because you saw that big wick. I honestly would not get out. I would hold, because you have to give the play room to breathe. And right here, if you would have got in at the standard dev, I honestly would have put it right here, because that's like 2 points. That's $200 spread. You have to deal with it, but you can easily make that back.
Right. That's usually, it's so funny when on my stops, I go by number. Can I handle a $200 or $300 loss?
That's awesome. No, that's awesome. You can either do points, or you can do a dollar amount. It doesn't matter.
I do dollar amounts based upon the trade. Like if it's a strong trade, I might take 300. I might be willing to risk 300 on it, on the trade, with the idea of making 7, right? So and then if it's not that strong a trade, I think maybe not so much. Then I would take 2. And okay. Yeah. But I like that. That's a very good principle that I just learned. That when the doji hits a deviation, pay attention.
Yep. Like you didn't have to get in there, right? Just pay attention. Other shit. Wait for other shit to line up. Other catalysts. Wait for other catalysts to line up. Okay. So over here, you might have not had volume, or you might have not had TTM, or whatever else you use, right? So,
yes,
so you avoid that entry, and then you're like, okay, over here, it tagged the standard dev again. Okay, what lines up? Does volume look good? Does TTM look good? Whatever other indicators you use, does it look good? Because the main strategy that we teach is stacking catalyst with confirmation. When you have those two, the play will play out in your favor more often than not.
And I would have gone in. Just right, for the record, I probably would have gone in on this candle if I had been aware of this and this as actual good confirmation points. I would have played it here, rather than what I did is I waited to here. Right.
Yeah, but tell me one wrong thing where you entered and exited. Can you tell me something? Because you said you entered somewhere up here, right?
Yes.
There's something missing right here. Can you tell me what?
I'm looking. Oh, I mean, well, there's a confirmation, but there is that. I don't know if that
No,
that didn't tag anything.
a doji, exactly. There is no confirmation. This
Right, it
doji
didn't
didn't
tag
tag
anything.
anything. Nothing tagged anything. The moving average wasn't tagged. There
Yep.
was not. You were just in the middle of the air. You were just like, either you're gonna float up, or you're gonna catch a knife, or you're gonna catch something.
Yeah, I was just trying to get a little something because I knew it was going to go to the DV. My theory is that it's going to go there. That's like I only played one contract, but then when it started going pretty good, I'm like, okay, let me just buy one more. And
Okay,
then I get odd and out, but I knew it was going to go to this mean.
you had that gut algo that was gonna go there, but I've come to the realization that most of the time, price action, look at like right here, like right here, right? It shies it. And this happens with fair value gas, with moving averages, with standard dev, where it shies the next level. It shies it. That doesn't necessarily mean that's gonna fail, but I would look for a confirmation at another level, like right here, before it goes up and busts through it. Once it busts through it, now then I'm looking for the next level. I want it to come back, confirm this level to go up to the next standard dev up here.
Right. Let's see what let's see what it did. It did. There it is.
Exactly. That's what I'm trying to get to. Is like it busts through, come back confirmed, and I don't
Right
know
there.
if it made it all the way to the next
The
level.
next, yeah, is the green right there.
It
Let's
might
see
have
this.
shied it. It might have shied it and came back down.
It did. It did. But it's still went up pretty high because that's the deviation is here.
Yeah, exactly. But what I want to drill into your head, you want to wait for that confirmation of
Yes.
a
Yeah.
previous level. I know that you're
Good stuff.
not used to catching 7, 10 points, but I want to get you comfortable with catching that amount of points. Be like, fuck yeah, I hit 700 bucks on one trade. You don't even have to trade 2
I
or
would
3
just shut
buckets.
down after that. I'd be like, peace out.
That's exactly what I want you to do. Wait for that confirmation. Get in your trade. Get the fuck out. Shut down shop and go have margaritas or Mai Tais at the beach.
I don't drink, bro.
Whatever. Go have tea. Go have tea or whatever. Go running. Go swimming. Go snorkeling. Whatever. You're in Hawaii, dude. There's a shit ton to do there. But that's what I want you to get in the good habit. I don't want you to get in up here where there's nothing. Like, how do you not know that this candle is gonna shy that level and just fucking go down? You don't. You have that gut algo kind of built in, but I want to build your gut algo to wait for that confirmation down here at a certain level and then go up.
Totally, that's a good useful thing. That whole doji to tag it is a big deal. That's a huge deal for me. So I appreciate that. Thank you very much. And if I talk rough to everybody,
you're good. I'm military.
Except for you can tell them I'm a naval officer. I'm a retired naval officer, so I talk to everybody like this. My bad, people.
Exactly. I was in the military. I have tough skin. I can take it, dude. I can deal it and I can take it. Well, here's one gold nugget that I want everybody to pay attention to is dojis. Those are tipping points. So
yes,
especially when dojis line up, that I call those squeeze points. Now, Brandon hasn't totally confirmed that, but from my experience, if especially on futures, if like right here, there's 2 dojis, right? So guess what? I draw a horizontal line. And I look back. Is there another doji somewhere over here? If not, it doesn't matter. I still use those 2 dojis, and that's a squeeze point. If a candle can get over that level and hold, it's gonna go up, or it's gonna shoot down. And guess what happens? That's a strong candle right here, full body almost. Holds that level, closes that level. I know the next candle is probably gonna go up because these 2 little dojis right here. So welcome everybody to the standard strategy. But I like the chart this way. You know, like get rid of the volume profile. And then one tip, just to keep your chart clean, this is what I used to do, and I still do sometimes, is instead of having all that volume right here where it's fucking clouding up your chart, when Brandon gives us the POC or he recaps those videos, look at those levels that he sends out. Look at those levels, like the POC. So look at the POC. What price does he put the POC on? Okay. So instead of having the volume profile right here, I'm drawing a horizontal line on that POC. So now you can even label it. That's what's cool about TOS is you can draw a horizontal line and label it and put it. Make sure you put the label over here on the right. You put the label over here on the right, whether it's a daily doji or weekly level or any weekly, daily, any strong levels that Brandon gives us, mark them off, line them up. So like that, your chart stays clean. And once that level is no longer valid, then remove it. But yeah, definitely, I recommend you keep the chart the way it is right here and trade it how I told you. Just test it out. See how it works. If it
Yeah,
doesn't
no problem. No problem.
If it doesn't work, then go back to your old strategy and we can figure something better to help you out with. But just the main thing that I'm trying to drill to all three of you is wait for that confirmation. Wait for that confirmation. Confirmation, the confirmation pays. The confirmation will pay you handsomely if you wait for that confirmation. And I don't want you to be in that trade where you got in and you're like hoping that it goes up or that it comes back in your direction. I want you to tell me, I waited for confirmation, I got in and I got my 5 points, or I got stopped out. Okay, if you got stopped out, let's dig in into why you got stopped out. Judy posted a book, the Japanese candlestick trading techniques.
Yeah, I saw it.
Judy's been dropping some good nuggets, The Power of Now, and just keep reading. Any book that stands out to you and has been helping you, reread it once or twice, maybe even 3 times. I've reread Trading in the Zone 3 times now, and every time I learned something new. But great dialogue. I'm glad you joined.
Good stuff.
Yeah. So I think that does it for now. Yeah, I figure test out that confirmation and see how it goes for you for a whole week. Just test it out. See how it goes. Keep track. The reason why I want you to sim trade is because you're testing out your strategy. You're not solidifying. Once your strategy is solidified and you have your grade A setup, then by all means do whatever the heck you want. But I highly recommend you don't live trade because that's gonna get. We're testing and confirming that your strategy is meant for you. With you live trading is going to throw emotions in there and it's going to throw you out of whack. But
I gotta be honest. I gotta be honest with you. That's gonna be. I'm probably not gonna do that. I probably will break.
I know.
Hey, look, I'm just being honest, bro. I'm a 57-year-old man. I'm telling
I knew it. I told the other guys. I know Kelsey's not gonna sim trade, but I wish.
Well, not only that, right? I'm up $2,900 since November 1st. So
awesome. Congrats.
Yeah. So I've made money just basically using what you just pointed out for me, and I don't take it as an insult. a weak standard deviation system, right? So I think I definitely can improve upon that. I'm definitely going to get that candlestick book because I've never been a really big reader of candlesticks. I just use the deviations. I listen to Brandon. I kind of know where the market's going. I look at the volume stuff, and I use my deviations, and I make trades, and I've been pretty successful. And I put stop losses in, so I'm not going to get ripped up. So far, it's been mildly successful. So for me,
now let's just build onto that.
yes. But I'm just trying to say, bro. I'm just trying to be honest, right? I'm not gonna be able to just go and sim trade. I mean, I'm like I said, I'm up almost $2,000 in 2 months. I'm like, not even 2 months, a month and a half, and so that's gonna be a rough one for me to go back to sim trading. I'll give it a try, or even switching to MES because
that too. Switch to MES so you can take live trades. That works too. Whatever it is, I need you to give the strategy a chance. That's what and if you take a couple of big reds, you're not gonna give that strategy a chance. That's why I want you to.
I took those couple of big reds. Remember, I texted you on that day.
Yeah.
Like, oh shoot.
Well, if you're willing to do it, for all means, have game at it. But like you saying, give that strategy a chance. You have a solid strategy. We just need to correct it a little bit.
Yes,
and fine tune it to you. Whether it's catching 5 points, 7 points, 10 points, whatever it is. My strategy is okay, lock in 75, 50%. If you're trading with 4 contracts, lock in 75% at 5 points and let one ride to your target. Let one ride, and you're gonna start getting used to it, and you're gonna be like, oh, I can catch 7 points, and then I'll cut off there instead of 5. I'm gonna cut off at 7 and let one ride to 10 points or whatever the case, and then you're gonna slowly keep scaling up your points. And if you're comfortable locking in 7 points on a daily basis, then for all means, that's your strategy. Go ahead and do whatever you want, right? But
my big thing is learning how Brandon defines the market, in the pre-market around 3:30 or so.
We will get there in week 8. We will get there, but we got to teach you the fundamentals, like confirmation, patience, discipline, that type of stuff. Once we get that down, your strategy down, we're gonna up your game, and hopefully freaking. Oh yeah.
Nope. Whoa. Whose spy is that?
That's mine.
Okay.
I just zoomed in. But yeah, practice that confirmation. This whole week, all 3 of you guys practice that confirmation. That was the hardest part that I had trouble with. So I recommend that you guys practice that. But there's practicing that confirmation and getting that laser. Then we're gonna practice your entries, and you're gonna be that much better in the coming weeks. So I'm gonna end the recording there, and I could take any questions that you guys have. Oops, wrong one. Sorry. Screen one.